And that means we are live on YouTube 9/6/2019 with Tackle Trading's halftime report. Welcome out, everybody. And if you're watching the show for the first time, always click that subscribe button and be a part of what we do. We've got Noah, we've got Cody, we've got Tim here. Let's break down the markets one step at a time. Noah, how you doing this morning?
Answer as always is fantastic. So awesome it hurts.
And Cody, what was that song and band you were listening to? That was so good. Perfect for a Friday, by the way.
I was listening to the Island Song by Zach Brown Band. So it is a nice little melody stuck in my head right now.
You know, my wife likes that band. I haven't really listened to all their albums or anything, but man, it was very, very chill, very relaxed, good music for making money on a Friday. Noah, do you ever listen to tunes while you're trading?
All the time.
Yeah, that's my go-to.
All the time. I have a good playlist I like to go to.
I don't really listen to or watch TV when I'm trading. I don't do the, CNBC or Reuters or Bloomberg or any of that kind of stuff. Only if there's a key economic report, but I always got tunes on in the background pretty much is the way I roll. I see you got Lululemon up here. Breakout. Looks like the earnings actually did come in and moved about 12.7%. We talked about a gap out potential move there. I also want to talk about markets. We'll come back to stocks one at a time. Markets are up a little bit. Carrying through here, Noah, does this move you into a bullish territory? You're still neutral?
Well, it's continuing to rise. I'm a little skeptical. Volumes, back down below typical thus far. It's early in the session, but you can see it slowing down a bit. So the initial knee-jerk reaction to the news is slowing down. There's a lot of overhead resistance out there. So if it retests and support comes in, yeah, I'll go cautiously bullish.
You had a triple bottom holding the 200 period moving average. You broke out of resistance on not a lot of volume down there. Do a little bit of teaching here on why volume matters so much to the way we look at charts.
Yeah.
You had the carry in the volume. When we were selling, volume was high. When we were holding support, volume was high, but the breakout doesn't really have high volume. That tells us something. What does it tell us?
Yeah, well, it's a measure of participation. And, you look at it as, it's for every buyer, there's a seller. For every seller, there's a buyer. And we see high levels of participation. That's going to, for me, puts a lot of force and strength behind a move. So you saw some heavy selling volume, but you also saw heavy volume coming in on the support and the subsequent rally. And then you saw some selling volume spiked up again, but you also saw high volume on the support. And then as it rallied up, the volume dropped. You'll notice that down here as the prices rose, the volume dropped. And you got a little spike in volume again on the selling day that last, Friday or a week or two ago. And then we've had higher volume on this last rally. So, pretty sustainable, just slightly above typical. And then as it's broken out, we saw typical volume yesterday. And then, the day before that was below average. And today we're early in the session still. So there's a lot of trading left, but the volume seems a little low for the day. So not a lot of strength in volume. And you see a breakout on weaker volume. It just tells me there's not a ton of participation in the move. And therefore I don't think that there's as much, it'd be like calling the election early if after only taking a sample pool of data of a small number of people.
I like that analogy. Yeah. Because you have limited participation here.
Yeah.
Do you think this might be influenced mainly on it being a Friday coming to the market, or do you think it's more of just cautionary news headlines? People aren't going to fall for it as much as they were before.
Could be a little from column A and a little from column B. Fridays can be low volume. The old Wall Street saying that I remember, I can't remember where I picked this up, but the only people still trading on Friday are the ones who lost on Monday, Tuesday, Wednesday, and Thursday.
Or day traders.
Who just have nothing better to do.
That's funny.
But traders do like to close out at the end of a week, and so after a week like this, I would not be surprised to see a little more profit taking towards the end of the session. That I'd expect a little red candle to come in here by the end of the day.
Speaking of profit taking, there are a couple of those picks from the scouting reports guys that are right at that first target. You should do some profit taking here on this Friday.
Well, target one, it comes down to trader discretion. There's a lot of times what I'll do, Cody, at target one is convert like a long call into a bull call.
Spread it out.
Or even take a partial profit. Yeah.
Yeah. When I say profit taking, I never mean just, hey, flat out close everything, because I don't do that. I would never tell anyone just flat out close everything unless you're just completely scared or there's some black swan event like the CEO getting indicted or something, then it's like close that position, don't touch it.
Sure. Yeah. But on a Friday, I'm more likely to take profit, even if I'm a few dimes early on a couple of targets, Noah. There's no question about it.
Oh yeah, especially recently with news coming out of China over the weekends and whatnot. You're seeing markets move dramatically on that Sunday night session, as the Asian markets go live. So,
Oh, yeah.
yeah. And so if you're trading stocks and you're trading options, you don't really get to adjust or hedge or remove any of those till the market opens. Now you can do things with futures, but not everybody trades futures. So it's wise to close out. There's a good reason people close out over weekends.
I'm going to have most of my delta hedge coming into the weekend. I've been doing it week by week by week through most of the year, but quite frankly, bullishness in some ways. But I buy long-term SPY elite puts for a reason, because I want insurance on my retirement account in a market condition like this. Now, when we are breaking out, you've got to respect it. You got to take your bullish trades. You got to do what you do within your system. S&P is looking pretty good here. We'll go through all the different indexes one at a time. But before we do that, give me FXI, if you would. A lot of this is based on this anticipation that this trade war is going to be moving into a more positive direction. But I keep looking at this chart, Noah, and I just see a mess and a downtrend. And even though this rally did have a little break above that pivot point, it's still pretty ugly in my estimate.
Oh, I think it's ugly. I'm holding long-term puts on this.
Mm-hmm.
And as of right now, I've been selling short-term puts against it, but I agree. I think it's a big bearish pattern. It's down below those moving averages. It's rallied up on, some typical volume. Like you had a couple good days of volume there with the news, but overall I see more selling than I see buying pressure. And it's in that support resistance zone where you could get a possible kiss goodbye down in that support resistance neighborhood and that 50 period moving average and just slowing down. And if you back that out to a weekly chart, it just looks like a bear retracement kind of setup.
I agree.
Where you got that drop and, running out of gas out there somewhere.
Yeah, I agree with that. And it's not exactly out of the woods. There's no doubt about it. U.S. markets look a little bit better. Give me a run through of the Dow, the NASDAQ, and the Russell real quick, if you will.
Let's start out with the Dow there. Dow, again, showing some signs of strength. It's up there closing near its highs right now. Again, typical volume for mid-session. We're about halfway up to the average volume. And, definitely cleared the 50 period moving average. What I worry about in this type of scenario is the overhead support resistance zone, probably around 2,700 ballpark on that one. So again, big candle, little candle, slow down. That's just, again, heading into a Friday. So Dow looks pretty interesting. NASDAQ, same song, second verse, but you got a little more of a doji style candlestick out here, a little less energy out of the tech and NASDAQ stocks. It's already into the old support resistance neighborhood back in here.
Mm-hmm.
And still has that all-time high to contend with. But again, typical volume for mid-session and small candle. I would not be surprised to see this turn red by the end of the day with a little profit taking.
Yeah. Not a good candle for carry through on a Friday. I mean, that would be more evidence to me that maybe a little profit taking, a little hedging, a little hesitation. It's not that you should be bearish on that candle.
Yeah, no,
it's just telling you something for sure. And the Russell here?
Russell here, 200 period moving average. It poked its head up above that yesterday with the shadow. And then today it's still holding below that. Again, small candle with a slightly lower high than the previous candle high. And again, this has been pretty sideways. Overall, you're still kind of smack dab between the established support and resistance zones. And that 200 period moving average is always a force to be reckoned with for technical traders. It's something you have to respect, and a close above it would be a sign of strength. A failure to close above it and, back down might be a sign of weakness there.
Yep. I'm kind of neutral on the Russell here. Perfect for cash flow, like we've talked about all year long. $DXY. Let's talk currency before we go into commodities, and then we'll get through the commodities markets as well. The jobs numbers came out today, and we still have strong jobs number, but it was a disappointment in some regards. Funny how the market works. The headline basically: weak jobs growth means that the Fed's going to cut interest rates this month. Well, we already knew the Fed was going to cut interest rates this month, so it kind of felt a little silly to me. Oh, and
excuse me.
Noah, stop dying.
Don't die on us here.
Wrong pipe.
Yeah. No problem. And Cody, what was your takeaway on the dollar here on that pullback?
Not much. So jobs numbers coming in as they did, they up, but as you were saying, news headlines are saying, oh, the Fed needs to cut rates. There's a lot of what I see is the media trying to influence what the Fed's going to do, not the media reporting what the Fed is likely to do.
If
where
by
they're trying to
media,
they're
does
trying to
that-
nudge and trying to push ideas, and never been a big fan of that. But like you said, the Fed's already set to cut rates. Them saying, oh yeah, they're just trying to like add to that like guarantee. So the headlines on jobs report is, they were good. They were nothing really to push the market one way or another. So when I see this on the dollar, I'm still looking at it technically. We had the doji from yesterday. We had some intraday movement, and it's still just sitting there right at that support range. So now we have 2 days making that break above easier to trigger into. So from a technical standpoint, nothing has changed from yesterday to today with the jobs report because they came in line, and that's good.
Yeah. Jobs numbers were fine. I mean, we stayed at 3.7% unemployment. We didn't build as many jobs as we thought, but it was still a positive number. Guys, if you want a job, you probably can find one. Doesn't mean it's the one you want or in the location you want. I know some people here in Salt Lake City, Utah, that are looking for a job. And they're like, well, nobody's hiring. I'm like, well, I mean, in that particular,
people are hiring.
Yeah, you might have to leave the state or work online or work remotely for another company. I get it. 3.7% unemployment, still very, very strong. And yet the Fed is going to cut interest rates in September, Noah. How do you feel about the modern monetary theory that has won out in this economy?
Well, like I responded to Cody's tweet, what could possibly go wrong?
Yeah,
I know what right? Could possibly go wrong.
Oh, goodness.
Cutting interest rates, the top of the market. I see no long-term problems with this.
Yeah. Yeah, it's going to be fun watching it. And by the way, no sarcasm here. We're reading the book Aftermath, which I have started. I know, Noah, you've finished it. Cody, you're reading it as well. We're going to be doing a book club podcast on that in a couple of weeks. Jim Rickard's Aftermath. Noah, strong book. I know you finished the whole thing. You enjoyed it, right?
Yeah, I enjoyed it. I'm actually going back and rereading it and kind of focusing on the details because I gave it a quick read while I was out of town on vacation. And boy, he makes a strong case for a lot of things. It makes me start to buy into and start drinking the Kool-Aid on gold at $10,000 an ounce. Sure. Why not? Sure. And in general, I think it just kind of paints a clear picture of some of the problems, but that's all it focuses on. It's a little bit of a doomsday kind of fatalist, view of the economy, but there's a lot of, I think, common sense in it as well. What could possibly go wrong with cutting, interest rates at the top of the market? And, when the Feds traditionally need about 5 basis points to slow down a recession. Well, if we only have 2 basis points to work with, then that means Greenspan's comments are probably true. It's maybe a foregone conclusion that we see negative rates here. Mm-hmm. So it's a very interesting read. And I think it's very educational. You got to take it with a grain of salt because otherwise I think it spooks you a little bit. Well, I mean, that's the nature of an author, right? You don't have to agree with everything to get the major takeaways. And I love his writing. I just think he's a very, very talented man. There's no doubt about it. That's Aftermath by Jim Rickards. Make sure you pick up a copy and join us for the book club here in a couple of weeks when we do that for the podcast. Let's go through the commodities markets here real quick, Noah. Crude oil, natural gas, some of the other ones. Start with crude light, biggest commodity in the world by a long shot. I find it very interesting when we start going through commodities. Sometimes new students they kind of compare them. They think of them all the same. Crude oil is a $2 trillion annual commodity. It's the biggest one in the world. Neutral here, Noah. You got anything to add to that? Down. Well, it broke out yesterday above that 200 period moving average, which I think, might have helped some of the energy stocks recover. Saw some rallies out of those. Mm-hmm. But it gave that up with the long upper shadow on the candle, and it's down here loitering at that 200 period moving average like a teenager at the mall in the 80s. It's not sure whether it's coming or going there. Mm-hmm. That is hanging out there, and this is literally like whipsaw. It's like up shadow, down close, down shadow, up close. It's neither here nor there, and so I'm leaning a little bit bearish on this one just because of seasonality, but the chart's really neutral. So that being said, there might be some cash flow opportunities out there. I know people like Gino and Mark like to sell the naked puts on that. And so, it's range bound. And I think it's, we have to keep an eye on those production numbers.
Cody, over in our weather department here, Cody, do you have an update on Hurricane Dorian at all? because that was a lot of the reason why oil had some risk in it. Obviously, it's not going anywhere. I know
It's running up the coast. It shouldn't be affecting oil much at all anymore.
That's going to be good for oil if you can get through that. Now for the supplies, right? Obviously, that's going to keep prices down here neutral. Yeah, interesting. All right, let's keep working through commodities here. Give me natural gas next, if you will. And nat gas is one, Noah, I've been talking about it for a month, and I brought it up and we kept working through it step by step by step. And I've been getting more interested in going.
Hey guys, I don't know what Powell just said in his speech, but the dollar just started moving pretty aggressively.
Did it?
It was an amazing speech. He prepped for it all night.
I guess so, because all of a sudden I'm looking at my screens and it's like the euro dollar just jumped a good 60, 70 pips in 2 minutes.
Well, let's take a look at that DXY again. Yeah, it's not. I don't know. It's doji.
Go intraday.
Intraday, eh?
Yeah.
Yeah.
Yeah. What just? That's what I'm saying. I don't know what he just said. I got to dig into it, but he said something they like.
Take a look. Whatever it is he said, the euro just dropped about, and it wasn't 60 pips. It actually looks like just about.
That was exaggeration. I just said it. Sorry.
Yeah, 20 pip movement here heading into the European banks closing and all that kind of stuff. In fact, I think they closed 50 minutes ago, if I'm right on my timing. So you just have U.S. banks open, and then we're going to be closing here at 2 o'clock, 5 o'clock Eastern. So I'm not sure Forex is going to catch a big run here today, but it's not out of the question. We've seen that before. Fed Chairman Powell is testifying right now. I did not see the headline. Nothing's hit my board, Cody, but we'll keep watching that. If that breaks down again, you probably have another day trade leg down there. It looks like.
I do. I'm looking at a little low base right now forming.
Yeah.
It might hit 60 pips, and then I would be happy.
If it does, we will let you know. Back on commodities for a couple minutes here, Noah, quickly through natural gas. Natural gas breaking out at 250 would be very, very significant in my opinion.
Oh, absolutely. Look at this. This is kind of a continuation of our previous conversation about volume. And you look at this breakout above the moving averages, and the volume has been well above average. See, I've got a little 50-period moving average on that volume indicator. That again, when you see above average volume, that's a sign of heavy participation in this run. And so, you had a little spike in volume yesterday on the doji, a little bit of a fist fight, but today it's continuing up. And again, early in the session, you're closer to the average volume. So I wouldn't be surprised to see that finish strong on the volume. And again, closing near the highs. So there's definitely some energy, no pun intended, or was it intended? It was probably intended. No pun intended on the natural gas breakout there.
Yeah, no pun intended as well. I agree, but I do like the reversal characteristics, the volume, the pivot points, the candlesticks. You can just see it in the color of the candlesticks. You don't have to be a genius when it comes to technical analysis. Just trade what you see. When you have more red over time in a downtrend, and now we have more green developing up in here, and the moving averages are rolling in, it clearly is doing something different than what we've had in a long time. Where we go from here, it could easily hit its head and have a little pullback, Noah. Those kiss hello patterns are very, very popular for traders to trade.
Oh, they're absolutely my favorite pattern. If you can catch a kiss hello is where you get the breakout on strength and the volume, and then a small pullback. It's that first pullback in an uptrend. If you can catch what's coming next, oftentimes you can catch a big run. Not always, but it oftentimes has the potential to turn into a big run, especially when you have other economic or seasonal type forces behind it. I like the setup. I'm seeing, good signals across the board on everything I'm looking at.
By the way, bearish retracement in gasoline. If you do trade the futures market, the RB contract is looking very, very good, coming back into old support. One of the better technical patterns for the bears out there, in my opinion.
Yeah, it's a decent looking pattern. So, you've got a little gap down, and a gap acts as its own little support resistance zone, and moving averages dropping. This is a good example of waning volume down here. While we're talking about volume, you can see that the selling pressure was above average volume, and then as the prices rose, the volumes dipped.
Moving on, let's talk metals markets here. Gold is holding here today about a 1/3% back up. Had a big sell-off yesterday, one of the bigger red candles it's had in quite some time, but we're above moving average. We're riding the lightning, as they say, those moving averages heading higher. Noah, you still bullish? I'm sure.
Yeah, I mean, you could see a little bit deeper pullback in here as as I think confidence resumes in the market. A little bit above average volume on the selling pressure, and it is definitely a little bit deeper retracement, kind of has that megaphone pattern to it. If you look at it, you can see it, expanding on the tops, but also expanding on the bottom. And that can be a reversal pattern. It's in the same sentiment as a bearish engulfing. So if you were to back out to like a weekly chart, you might see a bearish engulfing or a signal candle out there at the top. Not quite engulfing, but the top and the bottom of the candle range are swallowing up some of the previous bullish price action. So yeah, I think from a weekly perspective, it's a sell signal, but I would think that there's still going to be buyers of the dip.
Yeah, I would agree with that as well. Quick peek at the Bitcoin chart, if you will. Obviously, cryptocurrencies are a part of our routine for a reason. Some people trade them a lot. Some people don't touch them at all. Showing me some strength. I was very nervous, not nervous. I was cautious about cryptos there for about a month or two when it was just failing and failing and failing. And I'm not bullish yet, but it is showing strength this week. There's no doubt about it.
Yeah, a strong close above these moving averages in that little resistance zone at, call it 1100 there, 11,000, excuse me, would be a pretty good signal for it, as far as the technical speak goes. I did notice a little uptick in the volume, big buy candle uptick. And then today's volume's, slightly above what it's been doing. So decent signs of strength. Again, I'm not a huge crypto guy myself, but just from a technical perspective, it's certainly showing some signs of strength there.
Couple of companies I want to talk about in the news. By the way, we're doing our coach's mailbag today. We got a couple of questions coming in to our team at Tackle Trading address, as well as on our Clubhouse, and we'll be answering those questions here live in about 5 minutes. A couple of stocks I want to talk about. Facebook. Did you see the news on Facebook, by the way?
No, I didn't. What was the news on Facebook?
A couple of things. Number one, apparently they're launching some kind of dating app type deal to compete with Tinder, right? And I'm like, well, isn't that what Facebook is for some people to begin with? I didn't know that they needed some special app, but they are launching that. And then another one, the state of New York is more investigations into their antitrust type of deal and, kind of thing. So a negative news story, potentially a positive news story. Let's get both your reactions to both of those things. Do you think Facebook can compete with that? Does it affect Match.com? Match.com was one of our most bullish companies for most of this year, and we've had it on our reports for a long time. Noah, what do you think?
Well, it's been a while since I've been single, so I am not I am somewhat familiar with those apps because I was single not too long ago. But I think it's just one of those things where people are comfortable with the platform, and if that's where they're going, like think about it this way: like people already get their news from Facebook. Why go elsewhere if you can get your dating service there too?
Sure.
And then Cody mentioned he bought something the other day on Facebook, Direct or whatever they call the marketplace. So that's interesting to me as far as their business model goes. They are expanding into other avenues of revenue generation.
I think Zuck just wants his hand in everything. He's like, wait, what are you doing? I'm going to call it right now. All right, guys, mark my words. Within 2 years, they're going to say Facebook streaming platform, like a Netflix type deal. They're going to like movies on Facebook. And
sure.
It's the dumbest thing. He's trying to basically mimic and put his finger in every little pie he can.
Well,
but is that smart? Is that smart?
That's really smart. That's really smart.
I don't know. I mean, look at what Google did with Google Plus, right? These companies that tried to, not Google Plus. What was the Google social media thing?
That's what I'm saying. That one failed. Whatever that one was,
miserably. Cost them billions of dollars, and obviously they're going to try all these things. Does a company need to be all things to all people? Does Facebook really need to have workplace chat and streaming video and everything else out there? I mean, I get it, and don't you find it a little ironic that the headlines here are that they're launching new segments of their business while they're also being pro for antitrust because they have too much dominance over everything, right? Noah, I don't know. I mean, I don't know if it's good for Facebook to be launching all of these new different products.
I think it would be foolish for them not to diversify and not to attempt to create multiple streams of income. Because if they're relying entirely on advertising dollars, that can be a good stream of business, but why not get into other streams of income? If
Jimbo, I was talking about a Netflix thing, not Facebook Live. I know they have that.
Right.
Yeah.
No, I know what you mean by streaming. I take a peek at match.com. Let's see what happened to the stock here today. You've got one of the most major tech companies, social media companies in the world coming out and saying, we're going to compete with you. Stock was down here for a couple of days, hesitating, still very, very bullish. Just because Facebook comes into this market does not mean that Match will lose on this, right? You know, competition isn't necessarily a bad thing.
No, actually, I think it can do a couple things. One, it can bring the focus back and it can drive more traffic and that type of thing. Like competition can be very good, steel sharpens steel kind of sentiment there. And, just the fact that Facebook announces it gets people looking at Match anyway. And I look at it and go, okay, a little sell off yesterday, but hey, look at that doji at the rising moving average at the Sports Zone. So now I'm interested in maybe looking at that a little deeper. So
yeah.
Yep. I think competition is always good because I think it sharpens, and I think the ultimate winner is the consumer.
Back to Facebook.
Competition is the winner between competition of companies going at each other is the consumer. Neither company wins. The consumer wins.
Yeah, it's a good thing. I'm a capitalist. There's no doubt about it. We'll see how it ends up shaking out. In the same Facebook news feed, I see that there's news about their Libra, news about them launching into this new Tinder type thing. They're getting an antitrust suit. This company's got its hands in everything. It's really fascinating
the question, though,
to think about it.
Is
and if
Mark
they're listening right now, if they're listening right now, we're cool, right?
Yeah, Zuck, I think you're pretty cool. You and me, we I got no problem with you, dude.
Zuck, I've never shorted your company before. I promise.
Yeah.
Never.
A couple of earnings stocks and rounding up here. And by the way, I want to throw this out to the audience. Facebook's news here today, good, bad, or indifferent for the stock. Do you think it's a bull, a bear, or a pass on Facebook? I know the market didn't like it. Market brought stock back down here about 1.9%. They say trade what you see. It's got a deep pullback, some reversal characteristics. What does that chart tell you, Noah?
Well, it's pretty neutral. I mean, you're literally between that 50-period moving average and the 20-period moving average, which are both, important technical levels between support resistance. And again, it seems somewhat range bound. One of the things that Mr. Rickards said in his book was he talked about these FANG stocks keep being, a little bit overinflated, exposure to risk and as a group.
That chapter.
Yeah, just as a group. And he talked about, for safety in the financial markets, you want to be diversified. You want to have your precious metals. You want to have your ETFs and things of that nature. He said those FANG stocks he thought were inflated. Now, that's one man's opinion, maybe a researched opinion there. But I don't disagree. I think a lot of the price behind the FANG stocks is driven by future expectations of revenue.
Well, that was one of the things in that chapter. And of course, we'll get more into it in the book club. But he talked about some of the things that we talk about here. When you're looking at some of these longer term things, like what happens during a bullish market or a bearish market or a recession. Well, he said, come out of the more aggressive sectors like your tech sectors, which is your FANG, and move into some of your more safety sectors, utilities, real estate. So he kind of talked about things that we've talked about before. He just does it in a very articulate,
and
data-driven way. I'm
not personally a buy and hold guy on this kind of stock. I'll trade it all day long, but I don't necessarily buy and hold these kinds of stocks. It's just not in my personal portfolio. But that being said, there's opportunity here, of course, and you can take if it breaks above that 50-period moving average, call me a buyer. I'd be happy to take that signal.
Yeah.
If it breaks below that 20-period moving average, I'd be happy to take that signal too. So, for me, it just comes down to knowing what your risk is and always having a plan to control it, because otherwise there's a lot of variables there. And when you get a stock that's in that sideways range like that, that's a hard to call. Predicting is hard. Anticipating is, you can anticipate, but predicting is not the right word.
Yeah. I love it, Jimbo. In fact, I'm going to make it very, very simple right now. If you get, and there's a question in the chat here, Noah, that I absolutely love. It's going to detract me and we're going to move on from this topic. But can we get a free book of Jim Rickards' Aftermath if somebody reaches the ambassador status in our clubhouse, which means that they are recommending or inviting other people to come and join us, and somebody actually does take it and come and join us. Now, there's 3 ambassador levels. Bronze is 3 recommendations. Silver is 10 and gold is 25. What do we think they got to get to? Silver, maybe?
Silver would be
Or-
good. Well, Jim Rickards a big gold bug, so maybe they have to reach gold status. But
I think maybe a better gift for gold. If you reach gold, I mean, that's pretty good. So here's the deal I'll make for everybody out there.
If
In
you
our
reach gold,
clubhouse,
I will campaign to get you on the book club podcast.
there you go. If you reach silver, okay, because silver's been so bullish, it's one of our favorite things. If you get silver ambassador status in the clubhouse, I will send you a free copy of Jim Rickards' book, and I will actually, whatever, if you want me to write something in it or write you a note, I'd be happy to do that as well. We're going to have that podcast here in a couple of weeks. The clubhouse, Cody, as a matter of fact, let me find the ambassador list. And while we do that, Noah, break down DocuSign, some earnings roundup that we got to talk about before we move on. DocuSign and CrowdStrike, DOCU and CRWD. DocuSign's up huge, 17%. Big numbers.
Big
The earnings
gap.
came out strong. Give me a read on that.
Big gap into a fat resistance zone. So this $57 ballpark is a big $58 ballpark. It's a big resistance zone. Strong gap up. I don't know what their results were. It looks like they actually made a penny. That's good. So that's awesome. They've got a profit and people liked it. Big gap up. This is the kind of gap I wonder if it's going to fill. So for a short-term trader, you watch to see if it takes out the low and you expect it to maybe come back down towards that 200 period moving average or at least an ATR drop. But if it starts to take out resistance, you got a runner. So this is the kind of gap that I have to play wait and see on.
Yeah, beautiful gap out, but then a doji, kind of a wait and see. You got to like the fundamentals behind the move, though. There's no doubt about it. And then a stock that I've not traded before, but now I'm kind of interested in, CRWD. And they had earnings as well, gap down, IPO recently, two earnings coming out here, Noah, and that one is not a good sign. And by the way, when you're a trader, up and down doesn't matter. IPOs tend to fail in general lately in 2019 for the last 5 years or so in their first year. So now you have a downward move, potentially bearish here, Noah. What's your read?
Well, yeah, two missed earnings in a row and a break of a support zone and that newly formed 50 period moving average. That's a bearish signal, and again, you're seeing a big spike in volume coming in after that earnings report and some selling pressure down near the lows. I see that dropping towards a 70 support, seeing if the buyers will step up at 70 where you had a little consolidation and old support resistance in the back. So, or back here on the left, but yeah, that's definitely a bearish signal for me.
I love it. All right, guys, it's time for our coach's mailbag. Cody, kind of set this up a little bit for us, if you will.
All right, guys. So this is going to be like any mailbag you've seen on multiple different types of shows. What we had is we asked our students yesterday, or anybody who just wanted to send us a question, to email us at Team Tackle or to play something in Clubhouse, leave a comment here on YouTube. And here on Friday, we're going to pick a handful and we're going to run through those questions to answer what our students are looking for. So obviously what we always want to do is answer what you're asking, what you're curious of, because if we don't know what you want to learn, what you're curious of, we can't really help you. So you got to send in your questions so we can answer those. We have 4 or 5 here that we'll run through depending on time. So let's jump right into it. And I'm going to say the first question, which I thought was an interesting one, was, let's see, for a bull call spread, what happens at expiration if it closes below the 2 strikes?
We're talking about like a bull
the
call spread, bull put spread. What was
bull call spread?
Okay.
So let's set this up on the analyze tab. Let's build a bull call spread just on the S&P. That'll be
Lululemon, actually. I was looking at the pullback on Lulu. I like it. It's not triggered yet if you're not in yet. But in Lulu, you've got a neutral kind of short strangle on.
And this question was by Jared and Diane Taylor in the Clubhouse is where this came from.
Yep.
So if you're looking at like a traditional bull call debit where you're following all the rules, you're buying out in like December.
I would choose January here. I'll tell you why. Nothing wrong with December. They're monthlies. This is liquid. January inherently has a little bit better volume and liquidity in options because they tend to be leap option contracts in that month, right?
Mm-hmm.
We're set up a long time. So I'd pick the January.
Okay. And then what strikes do you want to see us use?
200 and let's do 200, 240.
Okay. So 200 by 240. All right. That gives you a delta of 240, delta of 33.
Yep. Now here's the thing. This is not a trade I'd put on post earnings. And by the way, I said Lulu. I meant Shopify, which is fine. We've got.
Too late. Too late. It's not.
Yeah. That's okay. We've got an example of a bull call spread here where you're the 200, 240 strike price. 200 would be the anchor strike in the money and or at the money. 240 be out of the money at a low delta. Now the net cost of a debit spread should not exceed 40% of the total spread distance. So on a 40-point spread, Noah, it shouldn't be more than $16 for the spread. Yep. We're paying $13.52. The cost is reasonable based on a 50-25 delta construction. We're not going to teach bull calls today. Answering the question is, what will happen? If that stock expired at 220, you'd be the proud owner of 100 shares if you have a bull call at $200 a share. The 240 would expire worthless. The contract, because you might think of it as a bull call, you label it a bull call, you mentally plan for a bull call, but you independently own two contracts, or you're in two contracts, Noah. You know, the market doesn't care that you have other things. The one contract will be assigned, the other contract will fall off, and that's the way that it'll work.
Yeah, absolutely. In fact, you could, if you do nothing, if you don't close the trade out, because it's a long call, I believe you're the one who has to exercise. And if you let it go through expiration, they'll automatically exercise it for you. Mm-hmm. And so you'll end up taking ownership of the stock. Yep, absolutely. And if it's below the upper strike price, you're not going to get called out. So you'll just end up owning the stock. Yeah. I personally like to close them out before the expiration, just to avoid assignment and owning the stock.
Got a couple of questions coming in here in the chat as well, and then we'll get to your next one, Cody. Kinley Co., welcome to our Team Tackle community here. What do you do to get silver or bronze at the clubhouse? Now, basically, here's the link. All you got to do is go into the ambassador link and actually invite people from the page. It has to be recognized from the clubhouse page. So you put in their email. I think you can generate your own copy link and things like that as well, and then invite them, Kinley. You'll know you've done it right if you start adding little numbers to your ambassador rating. If you get to bronze, you can send me an email and ask me any question, and I'll put together a video for you answering any question on any topic. How about that? If you get to silver, I'll give you a copy of Aftermath by Jim Rickards. Okay. So I really do like yoga. There's no doubt about it. Steven asked about Zoom. We'll get to that one maybe right at the end of the show. Cody, don't forget about that one. We'll come back to it, okay?
Will do. All right. So next question I have is about which type of laptop do you use? So the student's asking that he's been using a 14-inch laptop, and he's been looking at a 21. So I guess trying to find an exact question here, but it looks like he's just curious on what type of computer is best used for trading.
Yeah, I saw this one. It's a good one. It's a really good one. It's from Eduardo Silva, and I'll read it out. It's a long one, so I'll get to the gist of it. He says, I'm very excited about becoming a professional trader. So far, I'm very impressed with TT's community. I currently drive Uber Lyft. This is an important part of the question because he's on the road a lot. It's not just that he wants a laptop, something functional.
He wants something he can travel with.
In the car and all that kind of stuff. So what would you recommend for trading? I've been taking a look at 14-inch screens so I can take it with me. I currently have a 21-inch one, but it's too big, right? Considering a Microsoft Surface, it seems like millennials love it, and usually following them is a good idea. $1,000 or less is his budget, Noah, and he's looking for the right RAM, speed, all that kind of stuff. What are your thoughts on this topic?
I think you max out your RAM where possible because trading applications are RAM heavy, particularly TOS. Processor speed, I usually don't go top of the line processor speed. I usually take the generation before that.
Because that's where your cost is going to go way up, right?
Yeah. That's kind of your bang for the. And then viewing screen is just a matter of preference. I've not used a Surface, but I hear great things about them, and I'm a little jealous as a Mac user. I've got a MacBook, and I look at those Surfaces with a little bit of envy. So if you just want my opinion, they look good. And honestly, as long as you got the right processing speed and the right kind of memory in the laptop, as long as you're happy with the viewing area size of the screen, you're good to go.
I recently just went through this, and I recently just bought a laptop. And what I would suggest, honestly, is look at the gaming laptops. You want some of the same processing speeds and stuff, like those gaming laptops that are built for high amounts of data to flow through.
I'm with you, dude, but they're heavy.
They are heavy, and then
it depends.
Heavy, but it does everything. I've never had it slow down on me like my other one did. So
I bought a gaming laptop when I started traveling a couple years ago, a brand new one. I'm actually in the market for a new laptop as well, and I may or may not get a gaming laptop. The size of the screen, it's nice to have a 21-inch screen when you're playing video games, sure. But when you're just trading and you've got access to another monitor, because let's say that you pop into a hotel room with an HDMI port on the TV, you can connect it. Now you've got a big screen right up in front of you, right? There's a lot of different answers to this, Cody. I actually like the gaming laptops. That's what I would purchase as well. But I will tell you this, my daughter recently had to buy a laptop and I bought her one for her Army training, and I got the Microsoft Surface, okay? The Microsoft Surface is highly rated. It has all of the different stuff that you need on it. And the one mistake I think traders make when they buy new equipment is not enough RAM. Noah, what you said earlier is dead on because you don't necessarily need the processor or the graphics card. What you need is the memory. Because if you don't have enough memory, your system's going to run slow.
Yep, you need that RAM.
So, hey, my gaming laptop's only 15-inch, so I'm happy with it. But I also have a dual screen to plug into.
Yep.
So
yeah, whatever works, man. If you guys have answers to that question, go find it in the clubhouse and give him some tips. We're all consumers. We've all bought equipment. I personally, would just make sure I get the right RAM and all that kind of stuff. Next question, Cody.
Before you move on, I think Jimbo nailed it. Short Apple, long Microsoft. Make trades to pay for that laptop.
That's
right. Absolutely.
That's right.
All right. This is a little bit of a long one, but I'm going to run through it. It's about personal gold. So question is, I accidentally chose GLD instead of GDX. What do I make of that? Big error, question mark. Net neutral, just money price of GLD. I know how to think when it comes to BTC, a covered call. How do I think about a put in this case? I mean, by definition, the boomerang trade from personal gold, if I'm getting assigned and it's going to expire out of the money, is there a rule similar for covered calls to be as efficient as possible versus just waiting around for theta decay?
Well, for me, I think the biggest issue is the price tag of the ETF. GLD is what, 148, 146.
It's up there.
A little bit more expensive,
right?
GDX is at $28 a share. Now, I don't recall is the GDX leveraged?
No, not that one.
Okay,
nope.
So I think GDX I think the average trader for naked puts might be a better instrument because my general rule is only sell puts on stuff you want to own.
GLD is not a good naked put or a covered call candidate. I actually prefer leaps on that one.
Yeah.
Because your bang for the buck, you actually get just a better value. And the leap options on GLD are real dirt cheap on volatility. Yeah.
I'm gonna add to it real quick because he put another thing. He said, "I am new, so please use small words." So when you say leap option, what do you mean by that, Tim?
Good question. Kick me over to GLD, if you will, here, Noah.
You bet.
Simplest option strategy in the market is a naked put option. Now, the boomerang trade, which is what Coach Mark did an 8-part series on. And if you don't know where that is, it's in the commodity report between June and July of this year. Mark did an 8-part series on how to do boomerangs. I would go and review that content. You start with a naked put. But when you do a naked put option, Noah, you have to be willing to take delivery of the product you sell a put option. You're telling the market, I'll buy 100 shares if you make me. Right? So you got to have the money, you have to have the ability, and you've got to have the willingness to actually own those shares. So if you come in on GLD and sell a naked put at say $138 or $140, you might be the proud owner of 100 shares per contract at expiration or before if GLD does drop in price. Well, then you've got 14 grand for every 100 shares on GLD in your retirement account, Cody. But I can control GLD with a leap option instead. So I prefer that with this product. And
now, what is a leap option? I know what it is, but just for the students, what is a leap option?
I got you, brother. I got you. Quick look at the trade tab. A leap option is just a long-term option. I believe it's an acronym. It stands for long-term equity appreciation product. I believe I've made that up in the past, Noah. So I'm not sure
I
if those
believe you are correct.
Right.
It is.
Is that the right for all it is a long-term option. Okay. Yeah. Anything 8 months or longer in duration is by definition a leap option. So if I'm looking here, that would be the January 21 or the June 21. Those are leaps, right? And you can control GLD all the way out in January to 2021, past the presidential election, which isn't this year, it's next year, right? And actually get some exposure in gold. And instead of 14 grand, you're looking at 1,100 bucks. Okay. So Cody, the simplest way I could tell a beginner is it's a way to get exposure in gold without having to spend all the money, right? It's a way for you to be bullish on gold without having to put all the money in there. It's a great product. And the other thing is the question, man, we've all made mistakes, picking GLD over GDX. I mean, that's not a huge mistake if you can afford the difference. If that puts you in a position sizing, Noah, where you cannot afford to take delivery of GLD though, what would you do there? I mean, what would you tell somebody?
Well, you could always buy the put below it to turn it into a spread, and that would defray your margin cost and give you an out if you needed to offload it, because you could exercise yours and it would limit your risk, or just close the trade out and move over.
Yeah.
I've done that before. I've actually typed in the wrong ticker symbol and placed a trade, realized it, and gone, whoops, took a small loss and just moved back to where I wanted to be.
Yeah. Great questions, though. I love them.
All right, and last question, guys. It's a pretty simple one. Have a new student, Juan Gomez. Hello, everyone. I'm completely new, but very eager to learn. Is it okay to feel lost at first?
I love this question. And we've all answered it, by the way. I think, Noah, you answered it. I answered it in the clubhouse as well. I'll give the answer here on YouTube in case somebody didn't see it. If you're not feeling lost, you're not trying hard enough. If you're not lost all the time, you're not going to find new stuff, I think is what you said, Noah. I probably butchered that.
Pretty close.
the reality is, of course, you're going to feel lost. The education continuum goes from ignorance to awareness to competency to proficiency, and that's our process. We call it a learning curve for a reason. I really believe it takes somewhere between 1 and 4 years to develop as a trader. And I said that correctly and exactly the way I wanted to.
And real quick, some of the students are answering this right now. Students that we've had for years are saying that they still have things they feel lost on.
Yeah, you're just lost in new territory, right? Like you continue to get lost in new territory.
Absolutely. You're always venturing out. You need to be doing, guys, if you're out there and you're a student, proud member of Tackle Trading, and you feel lost at times, please say, I feel lost sometimes. I still feel lost sometimes. Put it in the comments so that all the new students know that they're not alone.
It's normal. Yeah, absolutely. 100%. It is just the way that it works. It's the part of learning anything new. And trading has all of its new lingo. You have software. You have a learning curve with many different instruments. You've got to get equipment. You've got to install it. You've got to learn about risk. You've got to learn about product. You have to learn actual tactics in the market, which requires judgment. There are 3 things I would recommend every beginner focus on until you get these down. Don't try to do too much, right? Build a daily routine. Type that in the chat for me, guys. Build a daily routine. If you don't have a pretty simple routine, that is something you're missing, because even as a 15-year veteran, I sit down in the morning, Noah, and I go through the same steps. Boom, 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 down the list. It gives me clarity and purpose and confidence, right? Yeah. That's number 1. Number 2 is learn how to read a chart. If you can't read the basics of a chart, the trend, the candles, the pattern, and just put in the words step system in the chat here, guys, because we have an 8-hour course on how to read a chart. If you've not gone through that in totality, I would focus on the step system. And then the third one is learn how to put a trade on with the proper position sizing and all the basics and journal it. So enter a basic trade. Okay. Noah, what about you? What do you recommend beginners focus on? I mean, you teach master trader.
Yeah.
You worked with beginners for
Well,
a long time.
it's real easy to get lost in the woods. It's like learning a new language. And, the first thing you learn are a few words, then you learn a little bit of, sentence structure. And then you get into like, conjugating future, tenses of verbs and things of that nature. It's easy to get lost in the woods. Well, same with trading. Like learning to read a chart takes a little time. You can get pretty good at it. It's a basic language, your visual language. You're looking at pattern recognition. And it's okay to be bad at something. That's really true. Because if you can be bad at something, that means you got a chance to be good at something down the road. And it does take time. It's a little bit of a learning process. And I would suggest keeping it simple. Just trade stock, just do simple stock trades, learn how to buy with a stop loss, learn how to sell with a stop loss. And you don't necessarily need to know how the combustion engine works to drive a car. You need to know how to, the rules of the road work, and you need to get comfortable behind the wheel. But you don't need to know everything there is to know to trade, consistently. You just need to follow the rules. The rules are there for a reason. And again, it's okay. There's a lot of time when you're new to trading, it's like you don't even know the questions to ask, and or the things you don't know that you don't know. So it just comes with time. And I think you're dead on in your assessment, Tim. 1 to 4 years is pretty reasonable.
Yeah.
No, I love that metaphor of the car. The one that I've always heard was, 98% of people have no idea how electricity works, but every single one of us uses it every single day. You don't have to know how something works. All you have to know is know how to use it. You flip lights, come on. You plug something in, it works. That's all you need to know.
Yeah, don't stick a fork in the outlet. You're probably pretty good. So, don't take a bath with your iPhone. That's probably wise. But
I agree with that. That is very wise. But yeah, people do it every single day. They'll sit there in the tub and play it on their iPhone. I'm like, that doesn't seem smart. I get it.
Hey, one last thing I want to say before we start closing out, guys. I saw a lot of comments in here saying that y'all really like our new segments. We're going to try to add a few of those. And if you have any ideas on segments, because I'm literally just pulling these out of my brain and back and forth with coaches if they like these ideas. If you have an idea for a couple segments, email me, Cody@tackletrading.com. We'll talk about it. We'll get it put in place, because so far we've tried 3 new segments. I have a new one that I'm going to try next week. So if y'all have ideas, please email me and let's get these things going. Let's make this fun.
Having fun. One last one, Zoom Technology, ZM, Steven, my man down in Atlanta. By the way, Matt is in Atlanta this week, guys. If you're one of my ATL students and you want to go out and see the team, let me know. Shoot me a quick email, Tim@TackleTrading. Zoom, fundamentals weren't bad on this report. The stock just didn't do anything. It's kind of neutral. I love the company. It's still on my list.
Well, it looks like they beat their earnings, but it's pretty neutral. A little bit of bearish sentiment right there in the last couple of days with some increased selling volume. But I like the company. I like the product. And again, they're not losing money like a lot of IPOs. So, hey.
Yep. Big fan of the company long-term, Steven. Just kind of a muted earnings response. I'd be very cautious, actually, if it broke support there. We talked about that with IPOs. They tend to kind of go into downtrends for a bit.
Tim, Steven also added one more thing in the comments that I have to laugh at, because your Bears lost last night.
Hey, they scored 3 points.
They scored 3.
So I know they had the 100-year anniversary of the NFL last night. Apparently, we took our offense back 100 years because we were not exactly firing on all cylinders. Trubisky didn't look good. There were some good signs.
Your defense was there.
And those of you out there who are fans of any sport, you kind of know these feelings. For years, if I lost a game, Cody, it was like, oh, our season sucks. We're going to end up being no good. This is a problem. We got to win every game to be competitive. I didn't have that feeling last night because I saw our defense play well enough to know that Bears are a 10.
Your defense played very well.
Bears are a 10-win team.
Yeah.
They should be a playoff team, so it's one game. Congratulations to the Packers. So you can talk trash. I'll wear it on the chin. I'm in too good of a mood. It's no big deal. C'est la vie, brother. It's the weekend, and I'm going to be listening to the Zach Brown Band starting right now. Cody, take us out.
All right, guys, we will see you guys next week. Make sure you check out those scouting reports this weekend. As usual, we're going to be getting together and going through some amazing picks. Our pro members have access to those. So check out those reports. We will see you guys next week.